So we now have another exciting panel session on blockchain transformations. Here today we've got Nathan van der Bosch from Consensus Group Australia, Zachary Liu from Binance, Lucy Lin from Forestlyn, and Sidney Macdessi from Wholesale Investor.
Hi everyone, nice to see you all. Thank you so much for attending. Really excited here to be at Wholesale Investor today as part of the Venture and Capital Day. We've got a fantastic panel coming up today. We'll be talking about blockchain transformations. There's been a lot that's happened in the last 5 years, 10 years in terms of what's happening, and I'd love to talk a little bit about what's happened in the past, now, and also have the future of where our industry is going as well. I'm really pleased to be here. We've got an amazing panel session today. I'd like to introduce myself first. My name's Lucy. I'm the founder and the CMO of Forestlyn. It's a blockchain and Web3 marketing consultancy. I'm joined by Zach from Binance as well. We've got Nathan from Consensus Group. We have Naquib from MRHB, and we have Sidney from Wholesale Investor. Just get everyone to settle in the session, and then we'll get started very soon. But I think what we'll do up front is to give a quick 2-minute introduction to who we are, what we do, so it gives you a little bit more flavour in terms of who we are. But it is a very varied panel that we have here today. We've got a marketer, we've got a risk manager, we've got a behavioural economist, we have an venture capitalist perspective, and then we also have a software engineer builder. So you're going to get a whole flavour of blockchain transformation today, and hopefully lots of different perspectives. So Zach, would you like to give us a 2-minute intro to who you are and how did you come to this space?
Sure thing. Good afternoon, everyone. My name is Zachary Liu. I oversee the risk management for Binance Australia, including the newly launched derivative products. So I joined Binance back in January, and it's been, 6 months? Well, definitely do not feel like 6 months because everyone's been seeing that working in crypto is working in the dog year. Testified by the things we've achieved and delivered, and along with the challenges and wins we got. Before that, I spent 7-8 years in Macquarie Banking Group. Apart from that, being in Westpac, Equifax, and one of the financial service institutions called Link Market Services as well. And it's really my pleasure to be here, talk with like-minded people, despite the areas of focus will be different, which will sort of bring in the diversities of the topics and insights as well. That'll be me. Thank you.
Great. Welcome to the panel. Nathan, would you like to give us a quick intro?
Yes, my name is Nathan. I'm a behavioural economist. I work with Consensus Group. I'm the CEO and founder. So a behavioural economist, I often get the question, what does that mean? So I describe it in terms of bringing psychology and economics together. So I help people understand behaviour patterns and behaviour formations. So I spend my day writing the strategy documents associated with behavioural economics, network adoption, network sustainability. I've been involved in blockchain and cryptocurrencies for almost 10 years now, so I've been doing this for a long time. And it's something that I enjoy. So that's what I do in terms of my background.
Fab. Sidney, would you like to give us a quick background to yourself as well?
Sure. So I'm from Wholesale Investor, and putting on events like this throughout the country, here in UK, Singapore. I lead the community at Wholesale Investor, and a big part of that role is facilitating connections between investors and founders, understanding mega trends, where we're heading, what investors are interested in, and how founders can communicate that value proposition across to investors too. So finger on the pulse and following trends. Web3 has been a big part of that. Understanding how to communicate the value proposition of a lot of these blockchain companies, technologies, and everything that Web3 encapsulates is a big part of what I do, and I hope to enlighten a lot of people here today. Thank you.
Fabulous. And then finally, Naquib.
Yeah. My name is Naquib. I am the founder and CEO of MRHB DeFi Network. MRHB DeFi is one of the first ecosystem targeting the Islamic finance industry, which is a $3 trillion industry. We are the first movers of the space, building a suite of applications ranging from decentralized finance, GameFi, and Web3. My background is technology. I have been 15 years into technology, working for companies like Huawei and Ericsson, and traveled like half of the globe, delivering solutions across them. My last job before I moved into crypto into full-time was of a business architect working in data analytics, data mining, and customer journey. So blockchain happened naturally as a transformation from digital transformation technologies heading towards the industry 4.0. So that's where I started working into enterprise blockchain, and then gradually DeFi and financial applications were the last thing that came up. So that's where MRHB was born, when I realized that this industry lacks products that addresses the faith-based communities of the world.
Fab. All right, and so as I said, I'm from a marketing background. I've worked about 18 years in various organisations, American Express, AMP, Qantas, Here Technologies, spanning around the world, lived about 5 different countries, so very passionate about customer, go-to-market strategies, and being a global citizen. I'm very passionate about diversity as well, and also helping a lot of all the founders and projects raise into the next scaling projects. So first and foremost, I'd love to hear about your perspectives in the last 5 years. I know that there's been a lot of change that's happened in our industry. I started in blockchain consulting since about 2017, and I've seen a lot that's been different between now and then. And I'd love to hear your perspective in terms of how you think blockchain tech has changed. So Nathan, do you want to let us know some perspectives?
Yeah, so when I first got involved in blockchain and cryptocurrencies, it was Bitcoin, because that's all there was at the time. There was a lot of focus on technology, elliptical curve algorithms, nonce calculations, prime number factoring, all of the technology and the underpinnings of the technology, because it was new. I've noticed over the years, especially accelerating now, we've moved from a technology focus. Marketing became part of the strategy as well for a number of years. But more recently, and what I'm dealing with now, is more the business focus. What problems is the blockchain solving? What impact are we removing from the users in the network? What business value are we actually creating? The fact that a blockchain sits underneath, the actual end user may never actually see it. The fact that it does what it needs to do is important to those that build it, but to the end user, they may be even oblivious to it. So I've seen a significant movement from a technology focus through to marketing and a lot of the hype that came through the ICO years. And then more recently now, it's the business of blockchain and the economics that go with that.
Yeah. And then from that, what about from a risk perspective? Have you seen a lot of changes in the last 5 years as well, Zach?
Absolutely. I think if we look at back 5 years, Binance just passed its 5 years birthday, but from risk management or from my personal perspective, I think 2 biggest change definitely will happen is, one is the process change, one is the technology change. If you look at 5 years back, there was a lot of unregulated platforms, there was a lot of manual in terms of KYC onboarding process. Throughout the process, you've seen the technology involved. You have more automated tools. You have more sort of interactive data to be able to verify your entity digitally, faster, and more transparent. So really from the risk management perspective, we are urging more technologies to be able to interact with data in a more transparent and robust way. And that's where we talk about the transformation, talk about the technologies and whatnot, based on we need to protect the consumers, we need to protect the data, and we need to ensure that there's no gap in terms of between the process and technologies. And that's what I've seen in the past 5 years.
Yeah. And, I remember signing up to all these exchanges, you have to put up your name and your ID, and has that changed now? Or?
Someone might complain that still be the case for some, certain user type, especially, companies or non-individual entities. But as I mentioned before, we're working tirelessly to be able to integrate with the data tool, with the automatic tool, again, to both sort of boost the user's experience while mitigating any risk.
What about you, Sidney? Have you seen lots of sentiments with the investors in the last 5 years as well?
Absolutely. So I think when it first started out, we saw it as a novel solution to what really is an ancient problem of corrupted power, right? And decentralizing and democratizing networks across sectors. And it was really privy to those who were technologically competent, mainly, and I guess philosophically very much aligned with what this entire industry represents. Now, from an investment standpoint, we see investors becoming more savvy, understanding the underlying utility, understanding that it's not just novel solutions and it's not a novel product, that it's going to have longevity. And that's really happening because we're seeing the real world connect with this technology and we're seeing real outcomes. And that's completely changing how investors see this as an investment vehicle. So the more they're coming to understand what blockchain technology can offer compared to standard technologies that were the industry standards up until now, I think the more capital we'll see flowing into the industry and the more smart money flowing in as well. And I look forward to seeing that continue.
Yeah. And Naquib, you're from a building perspective. Has technology changed a lot, you think, in your last 5 years for you?
Absolutely. That's how the transformation is happening. As I said, I started my journey from enterprise blockchain, and financial was never my domain. I've never studied finance as well in my education, but transforming into DeFi-based web use cases was a natural transition that happened. Like even the Gartner prediction cycle, probably Nathan would know that. That predicted the shift in enterprise blockchain and every bank and institutions using underlying infrastructure as blockchain in the next 3 to 4 years, but that did not happen. And because of the boom of DeFi, everybody started moving into DeFi. And that's where the transformations happened. And like Zach said about streamlining the onboarding as well on the use cases. So that's, the next level of onboarding users would be probably zero knowledge proof based IDs, where you have NFPs, non-fungible profiles. You don't really have to do the pain that Lucy you're talking about. So you have one unique ID across chains that would be identified without revealing sensitive data. So that's how technology is moving and migrating, and that's where we see things going ahead.
And I'm really excited because I think it is moving in the right direction, from 5 years ago to now. In your opinion, panel, what are some behaviour drivers that you think we can to increase even more adoption in our space that is happening at the moment? So maybe Nathan, do you want to kick us off?
Certainly. So one thing that I've pointed out in one of the articles I published on Medium is that blockchains are unique economic institutions. We've been used to marketplaces, exchanges which are centralised, corporations, governments, all centralised. The economics and the behavioural economics of a blockchain and the blockchain economy, the behaviour is unique. So at the moment, what I'm seeing is a transition or an explosion of needs and information around understanding how blockchains actually work, which are both distributed and decentralised, and they are unique economic institutions. So I see that as a macro trend in terms of the way in which we approach our projects, with the way we approach implementation, and the way we design the reward and incentive schemas. So that's what I'm seeing.
Fab. And you as well, Zach? Do you see a lot of any hindrance in terms of risk and adoption?
I think I can't agree more with what Nathan said in terms of getting the fundamental knowledge right to understand what is blockchain, what is Web3, what do you need. So in the real practice cases, that's what user will need to know as well, yes, from both the benefit front and also the risk front as well. So again, from the risk perspective, I am urging more and more user cases to be able to provide insight to the regulators, industry bodies, the government, to be able to have a clearer guidelines, which is again crucial for the development of this industry. So that's what I say is the most important part, not only just from the regulator's perspective, again, because it's a two-way street where user cases will positively impact the regulators, and with having a clearer guidelines by the regulators will definitely facilitate the users' growth as well and adoption.
Yeah. I think as you mentioned here, it's I think education is incredibly important, like, just making sure that people understand. Would the education be a huge understanding for the investor community too?
Extremely so. People are very hungry to understand the intricacies of Web3. And we've seen that with the content we put out and the responses from people on the other side watching our content. Extremely happy that it's being broken down in layman terms because they want to participate, but there are bridges in terms of knowledge that it's on us as pioneers, all of us on this panel and everyone out there today presenting, to really educate our potential users as much as we actually sell to them and market to them. And so that's important. The other thing I think is a key behavioral driver is the fallibilities that continually are exposed with centralized decision matrices that we've seen worldwide. I'm of a Lebanese background, and if I didn't know this, but Lebanon's the number 3 in terms of blockchain talent worldwide, and I was thinking, why? Well, our banks have dissolved and so has our government, and the people are looking for solutions. And that's always going to be a driver in this space. It was the initial driver and will continue to be a driver when we see these structures break down. And we see so unveil the decision matrix that has caused these problems. So that's going to continue. And then the other thing is when we connect the maxis and the purists on one side and the traditional on the other side, and we build technologies and infrastructures that cater to both a centralized and decentralized format. That mass market in between, they're very eager to participate, and they just want it to be a bit easier for their onboarding, as the first 2 panelists have told us today. So
yeah, and I agree with you. And I think part of why it's so difficult is because the technology is not there. So Naquib, do you have any insights to how we can make technology easier for mass adoption? You'd say.
Regarding the education, I have a difference of opinion over there because education is important for the builders, but not for the people using them. For example, if we are using applications on the internet, we really don't care what protocols are being exchanged in the background, how many packet losses are happening when data is exchanged. Nobody really cares. The work has to be done. It should solve the purpose for which the applications are built. And unless and until the builders reach up to the place where we can build applications solving purpose without any hindrances, we cannot have the adoption going ahead. We cannot. That's one of the reasons why enterprises are not adopting blockchain-based solutions. They're still experimenting with it. IBM, Deloitte, all of these companies, they invested a lot into blockchain facilities, but they didn't work. IBM dissolved their entire blockchain team except some few members remaining just for the experimentation and the research. So the reason is that there is still complications over there. Last year people were still talking about interoperability as a challenge, but now there are solutions coming up about that. Even though there are a lot of bad news about things getting manipulated and misused as well. So these are fundamental technological challenges. It's not about education. Education is there for the builders. For the people using it, they need the applications to deliver what they're intended to. That's it. So that's like my 2 cents. Yeah. 2 Satoshis.
2 Satoshis. Did you want to add something? I think you had your microphone up.
Well, I think that's a really good point that Naquib mentioned in terms of education to the builders of protocols rather than to the general user base. Again, I might have different opinions because I've gone through that sort of adoptions for myself. 4 or 5 years ago, I got into cryptos, start learning the protocol myself. Being both someone now that you probably going to be in the industry in the future, and also as a general public, right? I can see the benefit for the users to be able to be educated on even the protocols or logic behind the technologies, while sort of involving themselves to be whether they want to be part of it, they want to build it, or they want to simply leave the industries on their free will. So there's a benefit in different sort of aspects I can see. I don't disagree with what Naquib just said in terms of education is always key to both the general users and also the builders of protocols.
Sidney?
Yeah, so agree with you on the builder aspect. I disagree on the end user. I'll tell you why.
Got a debate here.
We're in a space that's very much community governance. And when you talk about Web3, there's a lot of aspects to it, right? So there's multifaceted.
Where is Web3?
Yeah, exactly. So I'm of the opinion that the lack of education in the Web2 realm led to the birth of Web3. We didn't know what was happening with our data. We didn't know what was happening with these centralized servers. And only upon learning it, once these institutions failed, essentially, or not even failed, but revealed what was happening in the back, did we really have a movement towards these new age institutions that we're building now. So I agree that the builders, the education's there because they'll be building the infrastructure.
When I mean by builders, it's not just the technology guys. It's about everybody working towards building this product.
Correct.
They can be from the marketing team, they can be from the content creation team, they can be the technologists, coders, everybody. But on this side, the majority of the people are the users.
Yeah, and I think that the users need to keep them in check.
Yeah.
So I think they need to understand it to an extent, and especially if there's a bit of community governance in play. So I think, yeah, a bit of both worlds, but I definitely think the users have a duty to keep these new companies in check if we really want to see a change in this space.
Okay, I'm going to change tack just a little bit. We've got many projects here. It's facing a bit of challenges. And there's many black swan events at the moment, like Terra Luna. I've got Celsius collapsing, etc. I'm from a marketing background. I'm passionate about the consumer. How do we gain trust in this space from all these things that's happening? What do you think, Nathan?
That's an excellent question, and I've actually thought about it in depth myself, given that blockchains are defined to be truth machines with transparency. One of the things I'm seeing at the moment is an increase in the number of inquiries around DAOs, and they've come across my desk a lot more recently and frequently. One thing I've proposed for them to look at very cautiously and carefully is not only the governance protocols, but also the risk protocols, which Zachary knows a lot about. They often forget about that. The other thing that I'm proposing is a hybridised type models around governance and voting. So predominantly the model for governance would be decentralised and blockchain based, but in black swan or grey swan events that sit outside the regular Gaussian distribution and that become outliers, that a centralised authority has the ability to step in and prevent death spirals or bank run equivalents. So that's the type of model I've proposed, which is more hybrid based.
Interesting. Zach?
Well, two things. One, for what Nathan mentioned in terms of DAOs, I think before the panel we exchanged thought in terms of applying boundaries, and we need to be really careful in terms of the self-governing rules for DAOs. Well, we need to explore options to apply additional controls against how you allocate the powers of decisions, how you make decisions out of it. I personally, keen to explore options over there. Two, to answer Lucy's questions, the thing is, we sort of need to take a step back, as we always. Like, what do you see? What do you define the user's success? What do you define the business success? And then again, it's a balance game to balance between the users and the companies, and hopefully we can find that sort of balance in between, and that's where the success will come in.
A lot of work cut out for you, mate, in these these events.
Well, my answer is very simple. Apply proper risk management to prevent such things to happen.
Yeah, I think compliance is going to be key moving forward if it's not already. How do you gain trust?
Well, I'm not going to talk on risk management because out of my depth there completely. But in terms of Terra Luna, look, from someone who just watched from the sidelines, I was forced to learn what a stablecoin is and how it actually should operate. Right. So these events enlightened me. You understand. Okay, you have 3 different options with a stablecoin. You're backed by real assets. If you just want to be backed by cryptocurrencies, you better over-collateralize. Me and Nathan were talking about that earlier, just to take into account volatility. And then you've got the third option, which is an algorithmic stablecoin, which is what the Terra Luna project was about. And we all saw what happened with that. And now we need to understand why that happened with that and how that can happen again. And I think the entire market were enlightened on, well, wait a second, you actually have to dig deeper. You have to look past the hype for a second, understand what it is you're dealing with, what options you have, and where it can go wrong. And this was a harsh lesson that really taught all of us the need for that in-depth research before jumping in. That's all a consumer can really offer at this point.
Yeah. And yourself, Naquib, gaining trust from a tech perspective?
So that's more of a financial event that happened. So Black Swan events are financial events. So this will happen when blockchain, what it's created for, or Bitcoin, or any cryptocurrencies that are created for is not handled the way they should be. So they are decentralized in a way they are supposed to skip barriers and skip custodian methods. So if that does not happen, so it's definitely going to face a risk. For example, you're supposed to, the reason why people move from fiat to cryptocurrencies is to have an ownership of the money. But what people usually do is that they convert it from fiat to crypto and put it in a crypto bank, which is an exchange. So again, it's any exchange. So that does not solve the purpose. So when you give the controls to others, then the events that happen in a fiat world will happen to the crypto world as well.
Yeah, just looking at the time, probably have one more question to go. And that's going to be looking at the future. So right now we're in an environment of rising inflation, tightening of monetary policy, lower market confidence as well. And from a broader economic downturn impact perspective, how hard do you think it's going to be for us to raise money in the future? And also, where do you think this industry is also heading? Nathan?
Yeah, sure. So the emergent trends that I'm seeing personally, certainly a lot of metaverse trends and the NFTs that go around that are associated with that. I'm also seeing a lot of interest in DAOs, which I'm urging certainly adventure, but also caution, especially when it comes to risk mitigation and things like capital reserves and the regulation to go on with that. So the two big trends that I'm seeing at the moment, definitely metaverse trends and the NFTs, definitely DAOs, and automating a lot of the governance protocols and hopefully some of the risk mitigation ones as well. I think that there's still a number of years for that to develop. I think eventually DAOs will spawn things which we call autonomous economic agents, which again are far more advanced than smart contracts. These are agents that can act based upon a set of protocols and programming, but can also adapt and learn. So I see that developing as well.
Fab. Lots of exciting things coming up. Zach, what do you think?
Well, for me, if I look ahead 3 years or 3 steps, I'm really keen to see the technologies or blockchain technologies to be utilized in forming areas. One is the consumer protections. I like to see more and more practical user cases to be able to apply either the consumer protection rules or the consumer protection process for the respective service provider. The second is the payment. It always comes down to utilities. How you're gonna make sure the blockchain technologies, digital assets, to be used within the payment space. That's always the key point. The third is the cybersecurities and data protection. Again, by leveraging the blockchain technologies, by using the decentralized concept to be able to distribute the ownership of each and every sort of data or cyber to mitigate such a risk. The last but not least is my area, fraud and the money laundering. So how are we gonna, again, leverage the technologies to be able to promote the automatic tools to pick up the triggers, to perform the risk assessment, and also to prevent the financial crime to happen.
That's going to be a massive area, I think, financial crime.
$1 million, way over there.
Nate, what do you think, Sidney, in terms of from an investment perspective, the future?
Sure. So my thesis is very simple. After speaking to multiple investors and VCs in the space, I try to understand, okay, what do you like? What do you see? They're becoming a lot smarter. They understand the technology a lot better. They're now comparing standard database technology and and centralized service to distributed ledger technology and decentralized service. And they're applying that across each sector and seeing where it makes sense to use this technology. And when there's that exchange of data between multiple parties, exchange of information between multiple parties, a need for transparency, immutability, and security, and an element of autonomy, they're saying, well, blockchain can work here. So we're looking at logistics, we're looking at insurance, we're looking at obviously DeFi, which everybody is understanding now. And we're seeing obvious economic benefits and operational benefits with blockchain. So that's what the investors are looking at. And then I'm excited about, and I'll say this and then I'll pass it on to you straight away, I'm excited about the connection of real-world data on-chain, so using math-based trust and smart contracts interacting with real-world data and seeing just how far we can go with that. That's what I'm excited about.
Fabulous. What about you, Naquib? What do you see?
I tend to agree to everything that each of you mentioned. Personally, I'm absolutely pumped up about the potential of DeFi and DAOs in particular, and how impact-based DAOs can be created for impact-based investments. So traditional business owners, small-scale industries can be benefited with the advantage of investment DAOs or borderless financing that blockchain provides in the future.
Yeah, and we are coming to a slower, economy, and I actually think it's really exciting because I think there's going to be a lot of great projects that's going to come out during this time. I think people are building the most during downturns, and it's going to be the legitimate people that will stay in the industry who will continue to survive and thrive. And another thing that I will mention as well that I see is that 4 years ago I went to Blockchain Week as part of Consensus in New York, 2018, and then I went back to a Consensus, the same event in Austin last month. And I see there's a lot more people in the space, like various people, talking about diversity of people from different skill sets, industries, ages, women, and I'm really excited. And people here, people here I've never seen from 5 years ago to 3 years ago to now, and I think there's a lot more interest in this space. I think there's a lot more mass adoption, which I think is really exciting. And as this, I think, technology becomes a lot more mature, I think it's just going to be a lot more ubiquitous as well. So thank you so much, panel, for your amazing insights. And thank you so much. Let's give a clap for everybody. And thank you for your time for attending.